What if the next great collapse doesn't make a sound? No shouting on trading floors. No panicked crowds outside of banks. What if it happens in the dead of night, triggered not by a human decision, but by a single line of code in a server halfway across the world? We've been trained to look for the echoes of 1929, for the historical signs of a crash. But we're looking in the wrong place. The greatest financial danger in history isn't repeating itself. It has mutated into something faster, quieter, and infinitely more fragile. And the terrifying truth is, the system that holds our savings, our homes, and our futures is balanced on a knife's edge, waiting for a digital ghost to knock it over. To understand the terrifying trap we're in, we have to look back at the original blueprint, the Roaring Twenties. It was an age of unstoppable optimism, where technology like the radio and the automobile promised a future without limits. People believed they had finally solved the ancient puzzle of boom and bust. Stocks, they were told, had reached a permanently high plateau. Ordinary people, from shoeshine boys to factory workers, piled into the market, often using borrowed money, margin loans, to chase a dream of effortless wealth. They stared at ticker tapes, watching numbers that only ever seemed to go up. They were certain that the past was irrelevant, that the rules had changed, and that this time it was different. And then, in October of 1929, they discovered it wasn't. The illusion shattered, wiping out fortunes overnight and plunging the world into a decade of despair. That crash was fueled by simple greed and old-fashioned leverage. But what fuels our system today is something far more powerful and far more insidious. After the 2008 financial crisis, the world's central banks were terrified. To stop another Great Depression, they unleashed a weapon of unimaginable power: quantitative easing. It's a complicated name for a simple, terrifying idea. They created money out of thin air. Trillions upon trillions of digital dollars, euros, and yen were pumped directly into the financial system. They called it providing liquidity. But what it really did was make money meaningless. Interest rates plunged to zero, and in some cases, even below. For over a decade, governments, corporations, and individuals could borrow almost for free. This wasn't a recovery. It was a life support machine that got the whole world addicted to cheap debt. It punished savers and rewarded gamblers. It forced everyone to take bigger and bigger risks just to stay afloat. The lessons of 1929 weren't learned. They were buried under an avalanche of newly printed cash. And that cash had to go somewhere. That's where you come in. The new Wall Street isn't in New York City. It's in the palm of your hand. Apps with friendly, colorful interfaces turned the stock market into a video game. They promised to democratize finance. But what they really democratized was speculation. And in 2021, we saw the horrifying result. The GameStop saga wasn't a story of smart investing. It was a full-blown digital mob. Millions of people, organized on Reddit forums, piled into a handful of dying stocks, not based on value, but on memes and a desire to stick it to the man. They used options and margin, the same tools that destroyed people in 1929, but now they could do it with a single swipe. Fortunes were made and lost in hours. It was celebrated as a revolution, but it was really a symptom of a deeply sick system. A system so flooded with free money that it had become a global casino where the chips were our collective future. But the retail gambler was just the smallest part of the story. What the giants of the corporate world were doing with this free money was far more shocking. For years, a dirty secret has been hiding in plain sight on corporate balance sheets. The biggest companies in the world have been on the largest debt binge in human history. But they weren't using that borrowed money to invent new products, build factories, or raise wages. They were using it to buy back their own stock. It's a perfectly legal, but incredibly dangerous shell game. A company borrows billions at near zero interest rates, uses that cash to purchase its own shares on the open market, which reduces the number of shares available, artificially driving up the stock price. The CEO's bonus skyrockets, shareholders get a temporary sugar rush, and the company looks incredibly successful. But underneath, it's a hollow mirage. The company is weaker, loaded with debt, and completely unprepared for a world where money is no longer free. This financial engineering created the illusion of endless growth, but it was really just the world's largest corporations slowly eating themselves alive, becoming fatally dependent on the very debt that will eventually become their undoing. And in 2023, we saw just how quickly that dependency can turn deadly. On March 9th, 2023, the illusion of safety in our modern banking system evaporated forever. Silicon Valley Bank, a darling of the tech world, began to wobble. In 1929, a bank run meant people lining up for blocks, hoping to get their cash before the doors were locked. In 2023, there were no lines. There was just the quiet hum of servers. Panic spread not by word of mouth, but through private group chats and posts on Twitter. Tech founders and venture capitalists told everyone to pull their money, and they did. Using their phones, depositors yanked over $42 billion from the bank in less than 10 hours. It was the first true digital bank run in history. The system wasn't prepared for this kind of speed. By the time regulators stepped in, it was too late. SVB had collapsed. It was a terrifying warning shot. Our technology hasn't made the system stronger, it's made it exponentially more fragile. It proved that confidence, the very bedrock of banking, can now be shattered in minutes. But even this spectacular collapse was just a tremor from a much larger, much darker beast lurking beneath the surface. What if I told you there was a financial market so large it makes the global stock market look like a lemonade stand? It's a market valued at over $1 quadrillion. That's a 1 with 15 zeros. It's called the derivatives market, and it's the unseen leviathan that truly controls the world. A derivative is essentially a side bet on the price of something else. A stock, a bond, a currency, even the weather. They were designed to reduce risk, but they've become weapons of mass financial destruction. Banks, hedge funds, and even pension funds use them to make colossal, leveraged bets that are hidden off their main balance sheets. It's a completely unregulated, interconnected web of promises, where every major financial institution is tied to every other. This is the shadow system that nearly brought the world to its knees. In 2008, we were told it was fixed. It wasn't. It just got bigger and more complex. It's a ticking time bomb, and a single major default could trigger a chain reaction that no central bank on earth would be able to stop. It's the one threat that keeps the world's most clued-in investors up at night. But even this monster has a new master. The greatest wildcard in our financial future isn't human greed or government policy. It's the god we've just built. Artificial intelligence. Today, the vast majority of trades are executed not by people, but by algorithms that operate at speeds beyond human comprehension. These AIs are programmed to detect market trends, read headlines, and analyze sentiment in fractions of a second. They are designed for one purpose: to make money faster than the competition. But in their cold, logical pursuit of profit, they have created a new kind of systemic risk. We are now vulnerable to something called an algorithmic cascade, or a flash crash. Imagine a minor political event in Asia triggers a few algorithms to sell. Other AIs detect that selling, interpret it as a major negative signal, and begin selling as well. Within milliseconds, a digital feedback loop of pure machine-driven panic is created. The market could fall 10, 20, or even 30% before a single human regulator even gets an alert on their screen. We've handed the keys to our global economy to a black box that we don't fully understand and certainly don't control. We built it for efficiency, but we may have accidentally created the perfect doomsday machine. In the end, the technology is just a smokescreen. The cars and radios of the 1920s and the AI and smartphones of today are just different tools used to express the same timeless human flaws: greed, euphoria, and the desperate, arrogant belief that this time it's different. The cracks are already showing everywhere. Stubborn inflation eroding our savings, credit card debt hitting all-time highs, and a generation of young people who believe they will never be able to afford a home. We are living in the most complex, leveraged, and interconnected financial system ever created. It's a masterpiece of engineering, built on a foundation of absolute faith. Faith in central bankers, faith in algorithms, faith in the idea that the numbers on our screens are real. The coming crash won't be a repeat of 1929. It will be an unraveling of that faith. The moment the world collectively realizes that the money was an illusion, that the growth was a facade, and that the people in charge never really had a plan. The real question isn't whether a crash is coming. The question is, when our faith in the system finally breaks, what will be left on the other side?